Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having an amazing day. Happy Tuesday to you and your family. Taking a look here at Bitcoin, we're going to jump into some high block capital data, talk about some liquidation levels. These are very important, as well as larger big picture stuff with Bitcoin dominance, CME gaps, and handful of other things, right? So really important things to recognize here today. Be sure to watch through to the end. I'll try to make this as quick and concise as possible, but I know that I do jump around and elaborate quite a lot, so feel free to ask questions or direct message me if you have any concerns. Feel free to help us also grow our Twitter community. Greatly appreciate those who have helped so far. Absolutely an awesome way to be able to communicate with my community members. Speaking of community too, we also have awesome signals as well as a trading academy, and of course just awesome traders that are able to just do very, very well together. So you're not alone. That's the bottom line, right? So when you trade, it's helpful to be in a group, and I can tell you groupful I don't think that's a word, right? But grouping traders do better than non-grouping traders in most cases, right? All right, anyways, check that out in your own time. So what we want to look at is some high block capital data. Let's jump right in here. Obviously, the price waked up a moment ago to what, 28.6, getting rejected at about 28.3. So there's a lot of selling pressure at that 28,500 range. There's no doubt about it. We'll see that on the liquidation levels here. But the bottom line here is that yesterday, a lot of longs got liquidated, hit pretty hard. Okay, big surprise. It was like a 5% candle wick from bottom to top in like less than 4 hours. That makes perfect sense. Open interest is down too. So as price comes down, open interest goes down. That tells us that any kind of pump like this shouldn't be as sustainable as it needs to be, because we need to have more open interest than we do not, obviously, based on the simple fact that the price action needs volume to increase. Okay, so as Bitcoin dominance comes down and the price tries to come up, it's a difficult thing there, and in a lot of cases it isn't sustainable. So I'd be surprised if this current little push is able to hold itself in place right now, especially in the light of tomorrow's Fed meeting and interest rate stuff. It's probably best to anticipate the price to come down a little bit further. Okay, that's exactly why we opened shorts as a community. I feel comfortable with that, but honestly, we still have a long position open with Bitcoin, and I think we're going to still hit that as well. I know it seems kind of strange to kind of go both directions, but you can do that sometimes to leverage your longs with your shorts, right? Different styles, different strategies, but just be very careful if you're going to be doing that yourself. That's more of an advanced trading technique. But one thing to note here is there's more bids than asks now for the first time in a long time. Okay, and just to note, if you look kind of in its history, last time we had a bunch of bids, the price did end up shooting up last time. Okay, now again, that doesn't necessarily mean the price is going to shoot up. It just implies there's more buying pressure than selling pressure as far as those who are asking to buy than those asking to sell. Okay, so that's essentially what that's telling us. Nothing super crazy. Don't need to read into that too much, but it is a thing we want to just kind of recognize. Okay, we're going to take a look at the last 7 days of trading here. We're just going to zoom in a little bit, kind of see roughly what we're looking at. Tremendous amount of liquidation data at about 30,300. We know that from yesterday's video, of course, but that just kind of helps reaffirm that those have likely been closed. Those were basically limit orders, essentially, that were never filled. And the same thing here as well at 27,000. So there's we're kind of in this range between 27 and 30,000. Of course, we know that for some time, but being range bound has its benefits and its disadvantages too. But based on liquidation here, we can see the most amount of liquidations that really did occur is at that 28,200 mark. Okay, and that's kind of close to where we're at right now. Okay, now let's see what kind of positions are open and where. So open interest does accumulate the most right here at about 27,900. But as far as longs are concerned, we got some late longs here right there at about 28,100. Okay, so those are the ones that probably push the price action up here, kind of giving them a little bit of a bonus there. But you can see the shorts are hedged right there at about 27.9/28,000. So shorts are kind of underwater right now, but with Bitcoin retesting that sub 28,000 level, I could totally see why, because it absolutely feels like the price wants to come down further. I'd be willing to speculate that we're going to see the price come down before it comes back up again. I wouldn't necessarily say 25,000 is 100% probability, but I do think that we have a stronger likelihood of breaking that breaking down to the low 27,000 range, which is kind of where we're at in the range right now, right? You can kind of see this here. 27,000 is essentially the place in which the price has had very difficult time getting below. But right now, at 28,200, 28,300, there's a good chance the price action could stay in that range or come down from there. All right, let's just jump into some CME futures here and see. There was basically a gap a few days ago that was filled. We can see this one here as well. It's very small, but there is a little guy right there where the price gapped up a little bit. But as you can see, the wick down did fill that, and of course here as well. So nothing to really concern ourselves with there, but that is important to recognize though, just to note, and this is again probably a worst case scenario. But if you look here, you can see that there is a pretty huge gap between 20 and 21,000. I still don't think that's realistic. We'd have to break down 25,300 first, and that's going to provide a lot of support based on volume. So we're not there yet, just something to note. All right, so taking a look at Bitcoin dominance, we can kind of see here that Bitcoin dominance is inevitably increasing right now because a lot of money is funneling into Bitcoin. Alts got hit fairly hard yesterday, and a lot of them, all the profit that was taken from that is going into Bitcoin now. It's a standard rinse and repeat type of scenario. But if we take a look at the weekly, we can see that Bitcoin has had difficulty breaking through that level of 49%. Okay, so as long as we stay below 49%, there's a great chance that the price will stay where it's at. We need to get above that in order for the price to kind of surge for Bitcoin. Okay, so that being said, if we continue to reject at this level and the price starts to come down, we can expect altcoins to start to surge. I wouldn't necessarily say it's alt season 2.0, but it is definitely potential for that. Okay, so we're not there yet, but just know Bitcoin dominance comes down below, just say 47%. We should expect all the others to start to increase. But as you can see right now, even in the light of Bitcoin just kind of going sideways for a day, you can see the price action still coming down. Okay, so not the greatest for altcoins, but generally speaking, you're probably more better off right now shorting altcoins than longing them for the moment based on the way that things are going. Okay, and again, I'm pretty much trying to tell you too that if you're going to be shorting, make sure you short very carefully, and you might want to consider holding that position for less than 24 hours because swing trades are getting hammered. I mean, even some of our swing trades have had some difficulty hitting their targets. I've had to cancel more trades than I like to recently, and it's just kind of the way that it goes, unfortunately, with this crazy up and down stuff that we've been having with Bitcoin. But generally speaking, it's just some friendly advice. All right, forget that. Let's go ahead and move on to the big picture. Let's go ahead and take a look at the monthly here. I'm not too focused about the price action. I want to kind of show you a couple things here. We want to look at the RSI still being up above 50. Preferably if it stays above 50, we're in good shape. So we want to see that maintain itself. MACD is slowly converging too. I would venture to guess another 2 or 3 months they will intersect and we will inevitably have that convergence. Okay, granted, even if Bitcoin comes down to 25,000, I think we'll still get that convergence. It would just take a little bit longer. Okay, so I really think that later this year we're going to see some pretty decent volatility in the upside here for Bitcoin. And once again, we got Bitcoin's halving next year, roughly 365 days from now. All right, again, I send all that stuff out on my Twitter, but just heads up, that is essentially a thing. One thing also to note here, and I forgot to touch on this with the monthly, is the fact that we are up over the 50-day simple moving average. So you can kind of see that right here, clear as day, up over 50, and that's trending exactly at 25,000. So that should hold as a support if the price comes down to that level. But as you can see, in the last few months, we have had some money outflow, of course, in the market there. And that's never a great sign, so the money flow index is telling us it wants to turn around. Okay. So that being said, daily, let's go ahead and take a look at that here. Well, we'll just focus on the MACD for right now too. It was supposed to converge here. It was ready to just kind of break through and go crazy right at the 29,000 mark. And of course we had I wouldn't say it was a dead cat bounce. What we're seeing today is probably more so like that. But it was kind of this bear trap, or sorry, no, the bull trap that we saw with that rush to 30,000 over the weekend on Sunday. That didn't occur. That turned things around. The price comes down. Exactly why I try to say that, hey, when the price converges officially, that's when you can celebrate. It's a little premature if you do that ahead of time, right? But that was a bullish sign. And that inevitably canceled itself out. Also, another bullish sign or bearish sign here is that we got 50 on the RSI, likely going to be working as a resistance level. Okay, so what that does, that kind of coincides with the price action at the price point here at about 28,500. So the price comes up here to 28.5 or 28.8. These two Fibonacci retracement levels are going to get rejected. Now, I've sent out some previous targets for Elliott wave, and I don't think this is the right chart for it, but it does kind of, this kind of reaffirms the head and shoulders, just so you know. Let's actually touch on that really quick. There's a good chance that we will see the price action come down lower based on this sentiment, because again, we're seeing we got our shoulder there, got our head here, and our shoulder here. While it's not the prettiest, there is potential for the price to come down because of that, due to the fact that there's a lot of buying pressure. these late longs that get wrecked, and then the reverse action comes down the other way. So head and shoulders patterns are pretty strong. They typically do come to fruition in most cases. So this kind of looking like one, I would say it's best to anticipate that to occur. But what I'm getting at here is this little pattern here that we're seeing. We need to see a lower low in order for it to complete itself. So if the head and shoulders pattern does occur, we'll need to see a breakdown below 27,000, okay? Or at least a candle wick down, because it could very well come back down to that level and go up from there, right? All right, so again, you don't base all of your trades off that, but if you're just, say, a day trader, for example, and you see these kind of things, it gives you the kind of the understanding that, hey, we are mostly bearish in the short term here, and the price action could very well continue lower, right? So if you can kind of look at the larger time frames to identify what's going on, it makes your smaller time frame trades a lot better, okay? So do yourself a favor, don't put your blinders on and just jump right into the 1 minute chart and start trading. Look at everything and do a good analysis and just kind of try to help see what's going on in the big picture. All right, so let's go ahead and summarize here. With the daily, we are underneath the 50-day set moving average for the moment. This is something that I want to kind of point out. This trend line that I drew out recently, being underneath the 50 is not great. Now, granted, we haven't closed above or below yet, so today is still early. But just say when the price closes where it's at or lower, we don't have the opportunity to continue that ascending trend, and we also close below the 50-day SMA. That would be a bearish sign as well. Speaking of bearish, let's take a look at this here too. I want to show you this guy, just to kind of paint the picture. It's a little easier to kind of see if you look at this here. Because I sent this out on my Twitter as well, just kind of a heads up of where we're at. You can see we're getting rejected now at that level of 28,500 to 28.8, and that is essentially a break to the bearish side of things. Now again, there's no guarantees. It's like, okay, we're instantly bearish forever because this. It just implies that the state of mind here is mostly bearish, and we're working our way likely potentially to the downside than we are to the upside. And that in itself is a positive sign if you know which side you're on, right? So again, a lot of different scenarios, a lot of different situations, but that's just something to kind of bring to your attention. I think it's important to recognize that we are kind of more so on the bearish side of things here, and that we're underneath a resistance level now instead of a support. You know, being above a support is much better than being below a resistance, at least if you're considering some long positions, right? So that's kind of where we're at there for that. So let's go ahead and take a quick look at the 4 hour and wrap things up here. We're under 50 on the RSI, that's working as a resistance too. More money is flowing into the market right now, but it's still a little premature. We got a MACD convergence on the horizon, but once again, never count your chickens before they hatch, because this could very well just bounce off and reject. Okay, so keep in mind the MACD is not giving us a bullish sign whatsoever, but if we can continue to maintain this uptrend, then there's a possibility of a breakout to the upside. Between now and then, we want to pay attention to volume and see how much volume is accumulating at specific ranges. We can go ahead and take a quick peek at that now, and we can see right where the current price point is at. We're seeing the most amount of volume accumulation over the last month's worth of trading. So roughly in the last 1 month, we can see the most amount of volume is at 28,000. Okay, so that's going to help us with that being potential support level. It explains why we saw so many doji candles yesterday on the 4 hour, and that explains also why we're seeing the price try to push up right now, because there's a lot of selling pressure. Okay, so a handful of different scenarios there, but generally speaking, we are looking fairly bearish to me, and I think this push here is going to get rejected, and we might actually see it pushed back down to continue lower just based on these resistance levels or previous supports turned resistance. Take a quick look at the 1 hour. Let's go ahead and see. TD sequential tells us we were overextended to the downside, of course. Price went sideways. Now we're back up to a 6. So we do have potential of another 3 or 4 more hours of continuation. Coincidentally, roughly the same amount of time as how much longer the US market is open. So we could see some volatility near the end of today's trading day. Okay, so again, traditional trading day, I would say somewhere between 1 and 5 p.m. Pacific, we might be able to see that. Okay. Furthermore, we want to take a quick look at the cloud and just note we're glaringly obviously underneath that cloud. So until the next 24 or 48 hours occurs, we need to anticipate the price to get rejected at this level and this trend line to hold us down as a resistance. Once again, the 50-day simple moving average on the daily is a big deal. We have 50 on the RSI on both time frames also working against us, and in this case here the cloud too. So there's more bearish than bullish signs right now. So trying to get too far ahead of yourself with this little candle wick up, it could very well be another one of these where the price comes down, or a more notoriously known as a dead cat bounce where the price comes down, has a little relief rally, and then keeps going down. Okay, so I'm going to put my money on the price coming down more so than going up. Again, be careful and cautious with whatever you do. Don't just take a trade because I said that. But generally speaking, I think it's important to recognize, the proof here is that we have, if I went with a statistical probability, everything we've seen so far, with all the time frames specifically right now, we are looking at, I don't know, somewhere between a 70-80% probability of the price action having difficulty breaking that level of 28,500, and that the price, of course, continues lower. Okay, so this is still a lower high. Keep that in mind. That candlestick did not officially close above this level here. Okay, so a lot more reasons to consider going down than up, or just to come to terms with it. So to me, what I've done, I've set a lot of limit orders on my favorite coins, and I'm essentially just adding to my position as the price comes down. I've gotten filled on some pretty nice price points on Bitcoin, but also some other ones like Matic, ETH, Render. There's a handful of other tokens I feel that are going to be doing very well, and you might want to consider adding to your position as the price comes down, because it does look like the price wants to come down. All right. Okay, enough. I think I worded things hopefully effectively here too. If you want to become a better trader, cryptocash.tech. Oh, please, actually, just a heads up too as well, just so you know, we are bringing day trades to the community here within the next week. We're really just waiting on Cornix to kind of address all the final, clarifications you could say, because it takes a little while to get the automation up fully. But we have our strategy in place, 10 to 20 signals per week on average. It's a pretty good system, but we're bringing that to community as well. So just know, if you just recently registered, that is on the horizon. That is provided to all premium members. And of course, be sure to check that out. Do greatly appreciate you watching. And obviously, if you want to help us grow our Twitter community, come on over. The link's down below for everything. We look forward to work with you. Hope you have a great rest of your day. Thanks again for your time.